Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to get an update from Canada Nickel Company. And with us here is this morning Mark Selby, the CEO of the company. Hey, welcome and good morning to Toronto. How are you, Mike?
Very good morning to you as well.
Yeah, great to see you. Thanks for taking the time. Just let me say upfront, I am a shareholder of the company, of course, just to make sure that this is disclosed. And I'm absolutely positive on the company. And you will see in a second why I am that. Because the company brought out and said they have a positive bankable feasibility study. And Mark, you must be super happy because, to my understanding, I think it's even better than we thought, right?
Oh, no, very much so. So, we're now the world's second largest nickel reserve, sulfide or laterite deposit. Now the world's second largest resource. The feasibility study itself, NPV $2.5 billion, 17% IRR. If you include the carbon capture and storage credits, that we expect to get, the IRR heads up over 18%. We're also will be one of Canada's and one of North America's largest carbon storage facilities. We did a pile of work on that over the last 12 months and very glad to get the engineering done to have that in the feasibility study. We're already more than a third of the way through the permitting process, so we're really one of the only large scale nickel sources, that can come online before the end of the well before the end of the decade.
Okay, super. So that means, let's say, normally you think the IRR of 17%, but it's after tax, right?
Yes, after
Yeah.
tax. Yeah.
So that sometimes it looks a little bit, let's say, on the lower side, but I think your project is over 41 years of production
Yeah.
proposed, yeah? And I think 17% IRR after tax, that's quite a lot, isn't it?
Oh, I worked at very large mining companies, and anytime you can get a multi-decade project to mid-teens IRR, you're in great shape. At peak production, we'll produce 48,000 tons of nickel a year, which would make us the third largest nickel sulfide resource. And the most important thing is how much free cash flow we generate. Over the 27-year peak period, we'd be $500 million of free cash flow per year and EBITDA of $800 million. So put whatever multiple you want on that. You get a good sense of what this project could be worth.
Absolutely. And I think you would not only produce nickel, you have also other metals, right?
Yeah, so we produce we produce a nickel concentrate and then a magnetite concentrate. So nickel concentrate has cobalt and then palladium and platinum that's in there, and then the magnetite concentrate is a mixture, is primarily iron with some chromium and nickel. The key thing there is chromium is a key element used in stainless and alloy steels. We would be, if we were in production today, we would be the only chromium producer in North America. And it's a critical mineral, listed as a critical mineral both in Canada and the United States. So, this really is a very, very important nickel deposit on multiple mineral deposit on multiple fronts.
Yeah, can we talk shortly about the AIC net cost, because it's over what is it, $50, $54 per pound nickel, so net after byproduct. And today the nickel price is what, 850, 880. So
Yeah.
that sounds to me like that is an outstanding margin.
Oh, no, very much so. We are in the first quartile of the cost curve. If you look at most of the operations that are in that first quartile, they always have, significant byproduct credits. In our case, we're getting byproduct revenue from the cobalt and PGMs and the nickel concentrate, but also, that iron chrome concentrate, is going to be an important source of revenue for the company as well, which allows us to get to that very, very low, all-in sustaining cash cost. The nice thing as well too, when you've got multiple metals, you're not betting on one particular metal all the time, and again, as we know, the mining business is pretty cyclical. So, having that range of commodities to generate revenue, again, helps underpin a very robust project.
Absolutely. Yeah, I mean, all those metals you will, or you will produce then hopefully are in really high demand. I think some of the metals are even in a imbalance of supply demand also. So I think the future looks really bright for that. So for me as a shareholder, and also I think for a lot of our viewers which are shareholders, it's very important. What would be then next steps? Where do you see the future? Because I could imagine if I would be a Glencore or a BHP, I would have picked up the phone immediately and called you.
Yeah, no, I mean, we've in terms of our goals for the rest of the year, we talked about getting an offtake agreement in place with one of the Korean battery supply chain, or car makers. we've been in discussions with them for quite a while. The amount of nickel that they're going to need in North America is literally about triple what we are today by 2030. We would need 6 or 7 Crawfords worth of nickel to come
But
to
there are
market.
none.
There's none. We're one,
Only
and
yours.
we've got more. We've got more projects within our Timmins
Yeah.
Nickel District that we think could get there. So we'll have we're looking to have an offtake partner in place, before year end. We're almost halfway through the permitting process. We expect to have permits by mid 2025. We're working with our advisors, Scotiabank and Deutsche Bank, on the equity side, Cutfill Freeman on the debt side. We expect to have our financing package in place by the end of next year, and so that way, when we get the permits, we're ready to hit the button and begin construction, and we're targeting, first production by the end of 2027.
So that would mean with an off-taker together, you could imagine to develop $1.9 billion?
Oh no, for sure. There's a couple components to it. One is, an equity check for a project of that size would be roughly $800 million. Between the various government financing programs, there's a critical minerals tax credit. There's a carbon capture and storage tax credit. Our federal government has a strategic innovation fund. They have a critical minerals infrastructure fund. So, we're expecting, about half or more of our capital, that equity check, to come from various government sources. The deals that we're striking with offtake people, again, I could sell my production 6 times over. What we want from an offtake partner is cash on signing and more cash when we make a construction decision. And so we're quite comfortable that between those 2 sources and a small PGM stream, that we can get to a point where we've got the bulk, where we can get the bulk of the capital that we need without having to come to the market for any kind of equity.
Yeah. That makes
Which,
really
as a
sense.
shareholder,
Yeah, exactly.
Yeah.
And you are a shareholder too, right?
Yeah, very much so.
Absolutely. Okay, super. That sounds like a great game plan. And I think within, let's call it the next 12 months, there is really a lot on the plate, right?
Oh no, for sure. No, this is going to be, we've gone from 5th drill hole to feasibility study in just 4 years, and this next 12 months, I think, is going to be, the most exciting yet. So
absolutely. Another thing which really catched my interest here is the carbon capture. I think this is something which is really outstanding in the sense of environmental thinking, one hand. On the other hand, CCS, carbon capture storage, is something which is becoming big in Europe also. Norway, for example, is really big. So I could imagine ESG-wise, also a lot of companies must run into you because they can get carbon credits. They can buy probably from you carbon credits because you are net negative. So that means you are generating more carbon storage than you are producing. And that is quite unusual.
That's correct. So yeah, so we'll be able to capture and store over 1.5 million tons of CO2 per year. What that works out to about 30 plus tons of around 35 over the life of the mine. Carbon storage, tons of carbon storage, and we will be able to offset our footprint is just 5 tons of CO2 per ton of nickel, and so we'll have a net 30 tons of storage available to the market. Why that's so important in nickel is most of the world supply increases have come from Indonesia, where they have some of the processes they use can generate 50 to 80 tons of CO2 per ton of nickel, which is not what Elon Musk wanted in terms of decarbonizing transportation. And so, as you said, we've got a significant amount of interest from people who really do want a low carbon footprint material. And so, we're very, very excited that, we able to develop this process. We've had inbound interest from some of the biggest, players in the North American space who are looking to become carbon solution providers, who want to help people get rid of their carbon, but they need a place to store it. So, we will be that, one of the carbon storage facilities of choice, in central Canada.
But with what price per ton have you calculated it? Because if I look at Europe again, there are already discussions like up to 100 euros per ton of captured carbon that you can sell. I mean, if I would apply this to you, we talk about 140 Canadian dollars per ton. If I time this with 1.5 million, that would be ridiculous high. Yeah, so even if we take a step back, let's say $50 per ton. That would be 75 million a year, which you make a profit.
Yeah, so for us, again, right, there's somebody has to capture it, transport it, and then we're the storage part of it. So we've worked with one of the leading global strategy firms to come up with what would be, what would be the value of our storage thing. And so right now we've only assumed $25 a ton. So yeah, it
Okay.
could be much higher, but for right now, for that storage piece, so that's a nice adder. What it also, why we were keen to do it is we can build the carbon capture and storage credit into our feasibility study financing plan. We still need to apply for it, but we're quite confident that we'll be able to get it. And again, that qualifies us for hundreds of millions of dollars of additional government funding. So that's free money is always good.
Yeah, absolutely. And also free cash flow.
Yes,
I like that.
exactly.
That is
That's what it's
super.
all about.
Yeah, then also the next important question from a viewer as a shareholder is how can you prevent not to be taken over too early? Because I think your share price is ridiculous low for what you have. Yeah, you are, as you
Yeah.
said, the second largest project in the world now, and you are in super safe jurisdiction. You have the infrastructure. You have, I think, your neighbors Glencore with a big smelter. There is a lot positive things which are checking the boxes. Yeah, so
Yeah.
my fear is that somebody comes and says, you know what, we do a premium of 50 to 100%, and everybody's going, hey, great, let's sell. But I think even $2 or $3 is way too low for you. So what do you have
Yeah.
in the back box? Let's say the poison pill, or you have large shareholders, or a combination of that
Yeah.
you can throw in. Because my personal target is
Yeah.
$5+.
Right. Yeah. No. No. At these share prices is definitely a concern. The thing I think that's important. There were 10 or 15 of us involved in founding this company 4 years ago. Between us, we still control probably 30 to 40% of the stock. We have Anglo American in as a cornerstone shareholder. They came in with a 9.9% interest, and so I think there's enough sort of strong shareholders there that it would we'd be able to do our best to extract the maximum value out of the share price, because at the end of the day, that's what we want. So
Everybody wants it, I would say. Absolutely.
yeah.
Super. So the next big things would be, let's say, an offtake, hopefully end of the year,
Yeah.
Q1, I would say. Yeah.
Yes. Yeah.
And
Exactly.
and then you have also all the money to really move forward and then do the financing package and or get somebody big in, right?
Yep, and then our permits by mid 2025, and a construction decision at that point to start producing by the end of 2027.
Yeah, exactly. Yeah, permitting. How far are you advanced with that?
Yeah, we're almost halfway through. So we've successfully completed the first stage of the federal permitting process. Then the second stage is the filing of the impact statement. We're on track to deliver that by mid 2024 next year. And once that's filed and accepted, then the government has 365 days to come back with an answer. Yes, no, maximum. So at the latest, we would get our permit by mid 2025. The government has made a lot of noises about moving quickly, and they've actually moved. They have been working with a great deal of pace. We're very, very happy with how that's been working. And so, yeah, we might even get it a little bit earlier. So fingers crossed.
Okay. Super. Perfect. Mark, thank you very much for the update. Look forward to the next moves, and just make it happen. The world needs
All
your
right.
nickel.
Thank you.
Thank you
Thanks
very
for being
much.
shareholder. Yeah,
Yeah,
take care.
thank you. Yeah, ladies and gentlemen, that was Mark Selby, the CEO of Canada Nickel Company. You heard it, an unbelievable, fantastic, bankable feasibility study. Everything is in the right place. Second largest nickel reserve in the world. And I could imagine that a lot of companies are now really getting their heads together in the offices, like with BHPs, the Glencores, the Anglos, and the Rio Tintos in this world, especially maybe also Vale, which just said they want to invest $10 billion into nickel production over the next 10 years. There's something, Vale guys. You should have a look on that. And yeah, things look great. So let's hope that everything goes the next months the right way, and he can do a nice offtake agreement, which would also take all the finance pressure off. And afterwards, I would say next year, things look really fantastic. So the share price is poised to go higher. That's why I'm a shareholder. Check it out. Thanks for watching us, and bye-bye from Switzerland today.